Welcome to the Old Capital Real Estate Investing Podcast with Michael Becker and Paul Peebles. During this program, you will hear interviews with real-life successful investors who will share their stories and provide useful advice on how to acquire, finance, and operate apartment complexes. Now, here they are, Michael Becker and Paul Peebles.
Welcome to the Old Capital Real Estate Investing Podcast. I'm your host, Paul Peebles, National Underwriter for Old Capital. And joining me today would be the man himself, Mr. Michael Becker, but due diligence assignment. In fact, he's on 3 due diligence assignments right now. So he is a very busy guy over at SPI Advisory. In the podcast today, we're blessed to have the man himself, Ricardo Hinojosa. Ricardo Hinojosa with Old Capital. How are you?
Doing great, Paul. Thanks for having me.
Thanks for joining us. What's going on in the Old Capital world these days, Ricardo?
Well, you know what? We are staying busy on a number of fronts. But one of the things, I've been getting a ton of questions, Paul, about some of the pieces you've announced around the Old Capital Accelerator program. So what's the latest on that?
So for anybody that's not familiar with the Old Capital Accelerator program, let's just call it the Accelerator program. It's a hands-on education and mentorship program designed to help serious apartment investors move from learning about multifamily to actually pursuing and closing transactions. Participants work on real opportunities, sourcing deals, underwriting, preparing LOIs, conducting due diligence, structuring debt and equity, and presenting investments alongside experienced operators, lenders, brokers, attorneys, and other industry professionals out there. All the folks that at Old Capital on the lending side are intimately involved in, because that's all we do is we put transactions together every day. So the goal of the Accelerator program is simple: turn education into execution, while building the relationships and confidence needed to own and operate multifamily properties, whether it is in the Dallas, Fort Worth, Austin, San Antonio, Houston markets, which we are really based on North Texas, but in your market, whether it is Denver, Chicago, Fort Lauderdale, or any place in the United States, the education is like math. The math is the same there as it is here. And we just kind of share the insights about how to look at these transactions. So I'm looking forward to it. To get more information, go to Old Capital Accelerator, oldcapitalaccelerator.com, and we'll see you at our next cohort. In today's podcast, some friends of ours that we've known for now, it's becoming a long period of time. They've been on the podcast in the past, but they tell a great story. How they got going before multifamily is really entrepreneurs and, some high technology background. They've come to the United States years and years ago, and they really are the American dream success story. So I'm going to turn the podcast over to Ricardo and talk with Vivek and Asha from Starcore here in the Dallas-Fort Worth market. Thanks for being on the podcast. And now over to Ricardo.
Thanks, Paul. Yeah, so let's jump in, guys. Thanks, as Paul said, thanks for joining us. These two are great friends. We spend a lot of time talking. They are fantastic operators here in the Dallas-Fort Worth market. I've known them for a while, and we talk a lot because we always like to know what's going on in the market. We like speaking with our clients. We like catching up, especially with those that have boots on the ground and really have a pulse around what the market is doing. And these two are our go-to clients when it comes to that. So guys, why don't you quickly introduce yourselves and let's talk a little bit about your background and what got you into multifamily.
Yeah, thank you, Paul and Ricardo, for having me and Asha. I mean, it's always exciting. We're a regular audience of Old Capital podcast. So we'll listen ourselves as well this time. And this is the second time, like you said, we always enjoyed. I'm Vivek Ngalkar. I'm CEO of and co-founder of Starcore Capital. I'll let Asha
Hey,
introduce.
Asha. I'm CEO and CEO of Evercraft and CEO and co-founder of Starcore Capital.
Yeah, we're based here in DFW, very much here, own about 500 units, including being key principal, roughly around 90 to 100 million at this valuation, and definitely excited about this market. This is not an easy market to operate. Um, I've learned a lot, and we are boots on the ground operators, being entrepreneurs. We have developed our systems and SOPs from the scratch, and that's genuinely paying off in this environment, and we see that in real time.
Yeah. So talk a little bit about before multifamily, really quick, so people can understand your background and your experiences. Talk about some of your other businesses. You guys are entrepreneurs at heart.
Yeah, sure. Yeah, I mean, and Asha, feel free to jump in.
Yeah.
So Asha is the real force behind a lot of things that we do. I mean, we know each other for, gosh, 30 years now,
Yeah.
and have been best friends, husband, wife, everything. So we came to United States October of 2010 as an engineer. We both are engineers, and I used to work for a high-tech company here in Dallas. Came here to take care of the business and market with the big American dream. Bought a house in 2012. I had to pay down a lot of money because I didn't have a credit history, obviously, like just 1.5 years. We bought the house in April of 2012, and we're enjoying the house, kept going. Our two girls, two daughters were very small. And in 2012, I was actually literally going paycheck to paycheck because I did so much of down payment for the home. And you never think of this, right? That something can go wrong sometime till it happens. And in right at the Thanksgiving of 2012, just 1 week before Thanksgiving, they decided to close a major part of the company, and I was out on the road, laid off, right? And unfortunately, the severance package and all was just not there that time. And I've been with the company for a very small amount of time, so I just didn't know what to do next. We had about $1,500 with us, including everything in the bank. And now we had just no idea how to pay the next 2 months because it's all holidays next. The mortgage, the car insurance, yes, it was a reality striking you, right? That's when we realize how naked you are in basically situations, right? You're just nothing that you can think of. Two small daughters at home, and they had the thing that changed both of us, Asha and me, was my daughters had written letters to Santa on the gifts that they want, and we had no money to buy anything on that list. Right. So that's when Asha and I sat together and we were thinking like, if I know I can get back in the industry, definitely not through November, December, because it's all holidays. Nobody's gonna give you a job, maybe in January, but this is the same thing that's gonna happen, right? So, and I had just lost a lot of this interest in W2 because I was working very loyal to the high tech company, and I was on the growth path and blah blah, right? Promotions, everything was told to me. So that's when we decided that, hey, you know what? I know it's going to be hard. It cannot be harder than this, what we're going through. And we made a decision that we'll build our own economy, no matter what. We just want to do this for us, for our girls, just build some legacy. And that's what we decided that in the holidays of 2012. Long story short, I got back in the high tech company through relationship. I really wanted to because I really wanted a payroll to start. I really needed money to start paying things. And that happened, but Asha knows it very well. I went back on the job as a completely different person, that I had no love left for any business, having any of these companies. I knew that I'm just an employee number on the file. I'm going to use this next phase to just fund our businesses and what we do. And I don't care whether we succeed or fail. So we kept on going. I still remember Asha and me sitting and talking, what do we do, right? What do we start? We are engineers, so we remember those days. You want to
Yeah.
know what all we thought about?
Just I remember that we were thinking we'll start some business which but not the software business.
We never wanted to get into
Anything
technology.
into technology, right? For that, first of all, you need a lot of money to start any technology business. So we wrote down on a lot of things what we need to start, but most of the things, I think, either you need a big amount of money to start any business. So meanwhile, when we moved in here, we were in an apartment complex, and then a lot of our friend circle were there in that whole thing that we were the first one to buy the house. I think that's a big step for them. I mean, in their eyes, that was a big step, that coming here in just 2 years buying a house. So even they started buying a house, and they started talking about, oh, for the house, this granite and that thing. And then we said, oh, why can't we do that? Why we can
Yeah, I mean,
import
every
granite.
house needs a granite stone, marble stone. So maybe we can buy that and supply. I mean, honestly, it's such a stupid thought, right? We had no idea how we were going to even do it. But we decided that looks like a good opportunity, 2013 around, right? When a lot of houses were being purchased in Dallas. And we opened the computer and started doing Google, how to import granite and supply. That's where we started, right?
Yeah.
We literally studied like engineering everything about it. Now, okay, let's start. So we didn't know how to register a company, figured that out. Asha registered it on Austin website for $300. We didn't know the name. We really needed a domain that is cheaper, something like $9, $10. Otherwise, and that's what we looked for. It was called Stoneways Limited. We registered the company, and I started contacting some of the suppliers back in India. Nobody would actually give you anything. So we really told them that, hey, we own a big business here in granite stone in Dallas, and we need some stone samples. So we started getting stone samples. Then we did door-to-door sales, right? Long story short, it'll do like about 8 months. We did door-to-door sales here in Dallas and Houston. We would go to all the suppliers and tell them that we own a big quarry of stones back in India, and we are trying to sell this stone. That's the only way you could get inside anybody's office. So we did that. Our intentions were clean, though. We just wanted to do good business, right? That's when many just shut the door. They sent back. Maybe we talked wrong. Maybe we used the wrong terms. But every meeting we started learning. And it went on for like 8 months almost, right? I would go at the lunchtime from my work, and that was my lunchtime. Just go meet someone, go meet someone. We used to drive to Houston, Austin. We went all these places. There was one guy who called both of us in and literally used the F word on our face and like, I'm going to throw you out type of thing, right? That was another turning point. It was really shocking for me because Asha was next to me and he literally used that word, and he was brutal, right? Coming back home, we talked, we said, hey, you know what? There's nothing against us personally. It just makes us tougher. Let's keep going. And then we hit a really good customer in Houston, ramped up a business from there. We started getting paid. We took a loan on 401k. Yeah, we had no money. We just took a loan on 401k, went on from there. And we actually saw the power of business. We kept the integrity and the transparency very high in the business. So he was so impressed over all his vendors that he started moving a lot of orders to us, paid us on time. And when we started seeing that payments coming, that started telling us that just think of the volume. Right. Yeah, we started very low margin business because we wanted to get in, but there was a time we reached about almost like 20 to 25% margin on those, right? And then we started thinking, think of this and multiply this by 100, multiply this by 1,000, 10,000. There is nobody that is stopping when you have business, right? There is no ceiling. That's what changed our more thinking. And we did that business, made some good money. We sold that business in 2016 because it was getting harder. That business is not something where you can scale easily. You have to be on the road because this is a very different industry on construction side. Asha had this dream, not dream. She was always frustrated with the cookware. She's a really good chef, right? She cooks really well, and she used to find these issues with the cookware. And one evening, she was so frustrated with one of the cookware. We were having wine that day. It was Friday evening or Saturday evening. She was cooking, and I was there next to her. We were talking about something, and she got so frustrated with one of the pots she had. And she was like, "Hey, why is this so hard for these guys to tell when I contact them, there is no way I can contact. Why is it so hard to take care of this cookware for them? They have manufactured it. I think we need to start our own cookware, right? And I said, okay, let's just do it, right? I mean, if we can sell stone, then we can even do the cookware. I mean, that's how, in a stupid way, and I like it, stupid and simple way it started. Next day, Asha is like, were you serious yesterday or was that wine talking? No, I'm serious. We can do it. So that's how EvaCraft was born, late 2015. And that's why we sold that business in 2016. Late 2015, we kicked off, took another 6 months to find the right manufacturer who could manufacture something that Asha really wanted. She had that envision of the design, making it easy. So we started 2015. It's been great business. Our only objective in that business has been actually we are here to amaze our customers. That's it, right? We have never done competitive analysis or anything in that business. Our focus is only customers. Learn from customers, make sure they're amazed, and probably that's why that business has been now like 2016, almost 10 and a half. This year we'll complete 11 years on that business, and it's doing fantastic, right? We went through and all these businesses are not easy. There are just so many situations that come, and every situation kept building us tougher and tougher, right? But at the same time, you cannot give up on customers because they are expecting. You are driving the responsibility, and I really give it to Asha because I'm with the nature, right? We are very complementary to each other. I'm a big picture guy and a vision, and I do the market and then bring it down to make it simple to execute. But Asha is really good at executing it. I get bored in the day-to-day execution, right? That's not me. But she loves this part. Like when I bring up an idea and I'm doing something, she understands it, but she wants me to bring it down so that it can be translated into 1, 2, 3, right?
Yeah.
So I do that and then I hand it over to her. Then she can really create like a system and SOPs out of it. That's her power, right? So I don't meddle with what she does, and she does not say that, hey,
So you guys make a fantastic team.
yeah, truly.
Um,
I think
and
that's
it,
one of the main reasons it's worked so well. Right?
now you guys have an amazing story. I've heard your story over and over again several times. I've had the pleasure, and it's always inspiring. So
Yeah.
thanks for sharing that background and talk a little bit about because I met you guys um,
2019.
in 19, I think a few years into Avacraft, and
Yeah.
you were looking at kind of what is next.
Yeah.
And you already had the multifamily, itch, and you were looking to get in the business. Talk a little bit about what you've done in multifamily since that 2019 meeting.
Yeah, yeah. And then I remember meeting Ricardo, you, and having that lunch together to get it. Yeah, multifamily, the seed I think was planted when we came to US and we stayed in an apartment.
Yeah.
And we always thought these must be owned by some big companies, right? I mean, these are so huge, and who owns these, right? All those things. So I started there, and then 2019, I met a friend. It turned out that yeah, it's even we can do it, and it was very clear to us that we have EvaCraft going on, and we built the systems there, and that's going on, and we have a great team on that company now, that business. So we really wanted. It was me who
Yeah.
was really pushing. I want to get in real estate. Let's do this, right? So that's how this took off. Long story short, we started with the passive investments in a couple of properties that help us learn about it. It's being on an LP side, and then we jumped right away. Right then, COVID hit, and sorry, during the COVID, there was a lot of confusion actually whether to buy it, the prices are whether right, whether people will even be able to work and pay. So we went through that confusion, but we kept pushing and we actually bought in 2021.
Yeah,
We
21.
bought our first property, and I remember Ricardo was there with us. We walked together that property. It was in Denton, and Ricardo, I think he lived in Denton, or he was born in Denton, right? So he knew the area. That helped a lot. based on the business plan, he actually helped us get a really nice debt product, and we drove that property. Yeah, that's the property I did a lot of hands-on, we both of us, right?
So talk a little bit about that. I'm going to
Yeah.
jump in a little bit. Talk about your first transaction. I mean,
Yeah, yeah. It was definitely the businesses had made us think through a little different, but since it was first time and we were actually raising money from people, it was different. It was a little bit of
I think I would say that we were a little nervous
nervous
because
for
we were
sure.
handling other people money, right? So we were nervous. And also we wanted to do everything because we wanted to learn each and every aspects of multifamily. So we were the leasing agents. We were like small work orders. We used to take care of it, and the bigger like AC issues, we had hired a maintenance guy, and it was 24 unit apartment.
24 unit.
yeah, it was a nice, beautiful property. After you sold it, not so much before you sold it,
Yeah.
but I mean, it was just before you bought it, it was just a beautiful property that you guys put a lot of your heart and soul into the property. I do remember that. And then you didn't do this really by yourself. You had an education mentoring group that you started with that got you the kind of the confidence to kind of understand about this is how the math works on this. This is how on how to raise money. This is how to do the loan and what you should be looking for with that. It gave you some background before you got into it because again, you didn't get into it blind. You got into it with some general knowledge. Talk a little bit about that.
Yeah, no, definitely. And I think that gave us a lot of armor to go with, right? Having that education. Multifamily is one of I would say it's the most operationally complex business in commercial real estate, right? And that's why there are just so many nuances to take care of it, to operate, legal, business-wise, so many of those. And that's why I think that education was super critical. Only when we went, because of that education, it was really the armor that was provided to us to go ahead. And that made us more confident. Like when we went on the property, when we talked about those different jagrants, right? Hey, what is the NOI? What is the rent growth happening? What is delinquency? What is the economic vacancy of this property? All that becomes just easy.
It's a different language. I mean,
Completely.
and you're coming out of the two different worlds or three different worlds, the pans and all the stuff through Abercraft, and then IT business, the stone business, and now you're learning a completely different language
Right.
of multifamily financing. I mean, you didn't know what a LOI is. I mean, a letter of intent. I mean, when do we put that in there? Is that attached to a NOI?
Yes.
So you have to learn some of this language, and that I think is the key to this business. I mean, it is an industry for an investor that you have to pay an amount to learn, but it was specific knowledge that you gained, and that certainly made you more valuable to be a good investor. Is that correct?
Absolutely, yeah. I mean, looking back, I would never suggest getting into this industry just like any other business and learn on your own. I mean, it's gonna hurt a lot because these transactions also are not small. They are heavy transactions. People's money is involved in this. So, and with respect to the overall, it's a team sport, totally team sport. Like, and this is what we learned overall, right? Like when we do a transaction, you have your LPs, but the most important is your biggest investor is the debt side. And there is just so much complexity on that side. And I truly mean it, Asha and me, right? Like we're working with you and Ricardo made it simple, right? Like we have a business plan, what we want to do with this property, and then sitting and talking to Ricardo, we basically came up with, I think we need this type of debt. You need to turn around this property. These are again the new words that we're talking. We need a renovation, rehab, and we need a capex of this much so that I can reach the rents of this much, all that thing, and we put together the debt side of it. And yeah, there's just so much into it, right? You have to have a good broker relationship. You have to have the contractors and whatnot. Even now I know I'm not using all the names. There's just so much around it. So that's why I think this education is really important for this industry. And having that education relationship, you can really put in efforts and build it like a really good business.
So tell me a little bit. So you bought the smaller property, but large to you originally, and then what did you buy next? And then what did you buy next? And what did you buy next? And
Yeah.
let's kind of go through your history a little bit.
Yeah. I think the first one definitely was a teacher, but having that right team around and education, that helped a ton. Once that is done, we built a confidence. We bought a 66 unit one next in Arlington. Once we bought that, we went on to buy next one is 160 unit and then another 180 unit. So we went bigger and bigger at each step.
That truly is amazing to go from X up to Y, and that, coming into an industry, but you just didn't do it overnight. You didn't buy all these properties. This was over a period of time that you learned, operated the property, you were successful, and it wasn't until that these properties were pretty much stabilized that you went on to the next transaction, and that you became an expert in some of those groups. One of the things I would want to ask you is that all your properties are in the Dallas-Fort Worth market. How come you didn't look to buy something for maybe a higher cap rate in Pennsylvania or a bigger NOI in Florida? So how come you decided to stay in this area?
Yeah, I mean, the number one reason is Dallas. Dallas actually definitely is on the growth path. It's growing massive. I just presented to my investors last week. Yeah, and the fresh data is almost 800 billion investment is happening right now in DFW, and the airport itself is being redone at $9 billion. That's bringing new jobs. There is like AT&T is building now new campus at $2 billion. So just massive investments. Even on our properties, I see there are people moving in from other cities and other states. The number is around 340 people every day moving in Dallas. And one thing I really like about DFW is it's not like any other city which is driven by, let's say, oil and gas or the technology. DFW is a city which is driven by multiple industries. So it's not that one type of industry goes down, then we're going down. There is like technology, construction, banking, finance, and there's just so much, right? It's a horizontal, really, really horizontal. So there is always something for everyone here. And that's the reason we just stayed here.
So tell me, I mean, you are kind of the data doctor. Everybody comes to you, Vivek, of trying to understand about why they should be investing in multifamily. And again, like I think you have 1,200 investors in your database or so. So is that how many you have, or do you have more than that?
We have about 3,000 or so.
3,000. Okay, sorry.
Yeah,
So
3,000.
but you are dripping on people all the time. And then you just said like last month or so, you did a presentation for 60 people in you kind of went through it of trying to give them motivation about why they should be investing, because everybody has really been in the stock market for the last, say, year or two.
Yeah.
Multifamily has been challenging, but you had 60 people come to see you in wanting to bend your ear about why they should be investing in the market. What are you saying to these people to bend their ear to get them to be smarter?
Yeah, no, definitely. And I think data and the micros that drive this never lies, right? I mean, nobody has a crystal ball, but that's the best we can do. And I love doing my micro data analysis. And I did a few webinars and these in person, and overall over 1,200 of my investors have been they're still watching on the YouTube that I put the recording on. So I think what has happened in the market is from what happened in 21, 22, the euphoria that happened and that's causing the equity to be wiped out now. that's introduced a fear in people, right? That's a human reaction to everything. And then people start thinking, hey, multifamily is bad. Let's not get into it. People are losing money. But there is other side to it. Just like Warren Buffett says, right? When there is a fear in the market, get in. And that's so true when I look at so much of data that real estate, just like any other economic cycle, works in a cycle. And this is a cycle that's happening. And real estate cycles, when I studied the past cycles, though the stimulus is different every time. So, and I am more than convinced that 2009 cycle and 2026 cycle, they are totally different cycles. And that's where we need to understand what is different and what is driving. So that's what I'm showing investors. And we are seeing that the values are reset so much that we toured a property, Asha and me toured a property last week, 50% down on pricing. That's unheard of, right? That pricing is from 10 years back. What is there? So there is no better point to get inside, get in. The operating at this is very difficult, and that's not our worry. I mean, we have been humble about it, but our teams are great. We're built on systems like this long we talked about. We know how to operate. On an average, we are 95, 96% occupied even now. We are distributing cash on the assets. On one asset, we have held it because of the sub-market so that we build the reserves and then go back to, and our investors understand it. We give all the details. And on the other side, you see how DFW is positioned to grow.
So
Yeah.
you
So
so you guys have been hitting the market pretty hard recently, right? We've been underwriting a lot of deals. You guys have been underwriting a lot of deals. What seems to be working? What maybe is still not looking good from a number standpoint, but what are you seeing and where do you think the opportunities are going to be over the next, say, 12 months for you guys?
yeah, I think that's a really good question. And it's interesting, Ricardo, like some investors are really sophisticated in the sense they understand it very well. So one of the questions they ask is like, let's go buy now, otherwise this opportunity will go away because they have seen 2009. It happened in a snap, right? Because it's a global financial crisis. Banks failed, so banks had to bail out. But this one is such that we're going to see this over the next 12 to maybe 18 months because of the distress, the maturity is coming. The properties that we're touring or underwriting, they're so different than what we're used to. Many of them are loan distressed, of course, like their DSCR has fallen almost like one or below one, so they cannot even service it. There is no, there's just no way they can continue. So they are in fact asking heavy discount. They're giving us heavy discount, almost like 30. The max I have seen is like almost 70% as well. There was a property at 30K a door, right? And I was like, it's unbelievable at 30K a door. But gonna come with few challenges that it's a low occupancy that you have to fill it up. Maybe we have to put in a more capital to bring that up. So what we are really looking at now is if we get an asset, it should not be that we're getting it at a discounted rate, but if I put in the capex, it's back to where it was 10 years back. You know what I mean? The basis of the property, that's critical. And that's the piece that we are looking at very carefully. Over the last 6 months, 8 months, we're definitely seeing more and more properties coming. And that kind of matches the loan maturity wall as well. I think we're going to see more and more of these. So as more and more of these come, it's a demand and supply, the pricing is only going to fall. And I think the great opportunities are going to open.
Yeah. Yeah, as these maturities are coming due, I mean, we've been expecting to see this for a while. I mean, we've all been talking about this. These lenders have been granting extension after extension for the last couple of years, for that, really for the last 2 years. And we're finally seeing, the end of the road coming, where the lenders are having to make these hard decisions, right?
Yeah.
The equity's been wiped out, and now the lenders are having to make a decision on taking a loss, and they're finally at that point where they're making those decisions. So it's going to be an interesting next 12 to 18 months. And I know
Definitely.
operators like you that have been pounding the pavement and been in the market for several years, definitely have an advantage, because this is not something, I mean, you can't go at it either without a great team and a lot of
Yeah.
experience,
Yeah.
because this is where the good operators start to shine a little bit.
Yeah, this is a great opportunity for sure. One of the things I'll just touch base on, and it's what I'm seeing really, and I've been like I was telling, I've been doing a lot of networking, like brokers, lenders, or even my attorneys, because everybody sees different things on their table. I'm trying to bring that common denominator picture. Raising equity is definitely harder in these times because what has happened, people have genuinely lost money, and because of that, there's a ripple effect that few more of them they are scared to invest. So that's why we are doing a lot of these educational type of webinars. There's zero sales pitch in that. There is absolutely zero. It's like just at least know about it, what's happening, and that itself is educating people that this is actually like a 52-week low in real estate, and that's going to be like this. So some of my discussions with my high-tech investors have been very interesting. The way they're looking at it is look at where the high-tech stock is. This is a right time to probably even balance that portfolio. Take out some profits from stocks and just park it here, which has been over the centuries, right? It's proven that it's a long-term wealth builder. So the transactions that in the market, what we're seeing, and you definitely know this well, getting into contract is difficult. Nobody's getting the price that they want. And even if somebody gets into contract, it gets extended forever. And then the deal falls off at the end, either because they're not able to raise equity or the treasuries went up. And we know treasuries are again 1 year high. So loan proceeds go down. So many things are happening. So I always have been telling this to my investors right from my first webinar that certainty will be the rarest commodity in this market. You bring certainty on the table, you will get the best deal at the best terms. That's given. And we are seeing that even our last get together where you had Michael, right? Michael said this there itself that that a guy with a discretionary fund was actually selected because that's a certainty of closing. Nobody wants to get pushed against wall and keep on extending. That is the deadline is gone, right? So certainty will definitely be the rarest commodity in the market. And that's the reason we talked to a lot of our investors and we naturally arrived at building our own fund to get the fund so that you have certainty and confidence on the table. Now you can go behind the assets with confidence and get the best one for your investors.
Yeah.
And the other angle we saw, and this is Asha and I talk to our investors a lot. One of the things that we're always seeing is there is this misnomer of diversification. That's how I call it. Let's say like one investor invests 100K each into 3 or 4 different assets. That appears like diversification, but it's literally like your 300 to 500K into different assets, different systems, different operators. So you are actually risk is being risk is being driven 5 different directions. So the fund, what fund does is it's a one operator, one discipline, and SOPs, and that's driving multiple assets in one. It diversifies that small amount of money. So that's why me and Asha, we kept coming back to there has to be certainty to get better deal. Otherwise, it's just going to keep going. So that defines your fund. And then within a fund, you need to acquire 2 to 3 or maybe 4 assets so that that same fund, like 100K somebody invest, needs to be diversified, risk diversified. So that's the kind of philosophy that we are working towards now.
That's exciting. So talk a little bit more about you are going to be going with a fund structure with these next set of
Yes.
acquisitions that you guys are going after.
Yes. Yeah.
Fantastic.
Yeah.
And is this going to be, well, talk about the box a little bit. Talk about kind of how you're going to set that buying box
Yeah.
so that it makes sense for you guys and for your investors.
Yeah. Yeah. We're keeping it very simple because we actually did not start with the fund. We kept working through this data over the last 6 to 8 months that what makes sense to solve this problem. And the only thing that came is definitely certainty, because you definitely want better deal.
Mhm.
There's just so many deals that are coming and there are different distresses, but you want better deal at better location. And if you want to get that, you better bring the certainty on the table so that the lender or the seller goes with you. You can even define the loan terms and other things. So that's number one. But that was not enough. That the risk is still in one asset for all the money. So that's why we decided let's diversify it, right? And that's how we arrived at it very naturally. So for that we are defining a buy box that's very tight. We don't want to be saying that we want to buy in 13 different states and then all types of vintages. That's not what we're doing. For the fund one, we are mostly staying inside DFW and 1980s plus assets. That's what we're targeting in this fund. So that because if you look at this, right, we know DFW really well. We have been operating here since almost like 2019. We have a great team with the boots on ground. Asha and I are always on our properties because this time we are just so much on the properties to keep an eye on. That continues, and we can do economies of scale and leverage our teams, which we already do. We have, you won't believe it, we have a dedicated person who looks at different properties. There's just so much of detail that looks at work orders and everything, and we rotate people and charge them to those properties. Because of that, and last 4 years, rent growth has been negative, right? But in spite, and then the inflation has been there now around like what, 3 or 4%. In spite of that, our expense ratios on properties are mid 40s or even lower than that. Because the income starts going down, your expenses are going to creep in, and that's going to tighten your cash. I know, Paul, I'm using a lot of these terms. I think people will know through the cohort what that is. NOI gets squeezed, expense ratios go up. That's what so two things we are focusing on really is like, how do we optimize these things? And those are the systems that we have built. And those are the systems now we're going to deploy on the fund and all these properties. So the buy box, it's going to be very tight. DFW only. DFW definitely is number one, and absorption is getting the supply is getting absorbed so fast, even in this space, right? So yeah, DFW only 1980s plus asset, very opportunistic. Location, we never compromise on location, bones, and then the turnaround time, we should be able to predict that, right? So that's
To finish up our conversation, because you guys are ahead of the curve in a lot of these things, what are you guys using AI, and what are you using AI for?
Many places actually, but I would put this way: we are not starting with AI. We are actually, if we are looking at one of the problems we're able to solve really well, we are bringing AI there to bring in the efficiency. Because we are in the Class B, Class C space, I have stayed away from voice AI, where you talk to people and all the automated. I mean, this workforce housing people, they don't like it. So we are just, it's a human touch point. So Asha is dead against it. So we have kept it away. We are like these processes. I'll give you another example, right? Like whenever a PO is generated for the maintenance supply for one of the big companies, it goes and they ship, it never goes to them straight. It first goes through our system. SKU wise, each item is checked whether that's the cheapest or the same SKU, can we get it somewhere else? And after that, only the orders are placed. And every time we end up saving between 15 to 60% on expenses. So, and
Wow.
that's done, right? So that's where we are bringing in AI, where there is a real impact on the operations. So that we are literally starting bottoms up. Invoice processing, this PO processing, analysis of expenses. Like my daughter is building the electricity meter reading and where the money is leaking, all those small things. So we're definitely big on AI, but we're going in steps.
So I always like to focus on success. I mean, you guys had a hardship a long time ago, a number of years ago, where you lost your job. You had a challenging Christmas that you looked to the right, looked to the left, and you didn't have a lot of options and not a lot of money in the bank. You've overcome that. You've worked hard. You've had a lot of success, and now tomorrow you bring your daughter to Milan for her to start a semester overseas. She goes to Texas A&M, one of the smartest ones in her class, and she's going to take a semester abroad. So, daddy and daughter are going overseas to get her set up. So, I mean, you've done a 180-degree circle from you were successful already, but you were challenged with income. Now you are in a pretty good position to, with your family.
Yeah. I mean, we are blessed to have great friends like you guys and the community that we built around it, right? It's possible only through like-minded people
Yeah.
going around like like-minded people, that's for sure.
Ricardo, last second question for Vivek and Asha before we end it.
Well, these guys are fantastic. Thanks for joining us. I think I will mention that when Vivek gets back from being overseas with his daughter, he's going to be joining us. He and Asha will be at the Old Capital Conference.
Yep.
Coming up at the end of September. So if you want to meet these two, you'll be able to reach out to them. We'll leave contact information for them, but come out to the conference. You'll be able to meet them. Vivek's going to be a special guest. He'll be on stage for a little while, so you'll get to hear more from Vivek. So it's a great opportunity to meet folks like this if you're looking to get into the business.
So last thing is, if people want to get more information about you and Starcore, what's the best way, Asha or Vivek, to get a hold of you?
Our email address is very simple, vivek@starcorecapital.com, asha@starcorecapital.com. I'm very active on LinkedIn. I post a lot of stories and operational stories and other things, and it's actually helping a lot of high tech and other folks. And I get so many contacts from there. And it's not about selling. My point is, and that's what happened with us, at least know what it is. Because this is such a rarest setup in this industry that this is the right time to get in. I mean, I can't tell enough. This is like, because I see so much of data, right? So LinkedIn, email, just, yeah, they can contact us anytime. I'm happy to share more details.
Sounds great. Well, I won't keep you any longer because I know you're packing to go overseas for your trip tomorrow for the semester abroad that your daughter's going to enjoy. So congratulations to her, of course.
Thank you.
Congratulations to both of you and your success. And Ricardo, thank you very much for joining us on the podcast. Certainly do appreciate it. I'm Paul Peebles. Have a great day.
Thanks for listening to the Old Capital Real Estate Investing Podcast. Please join us at oldcapitalpodcast.com to sign up for our weekly email updates. We'll see you next week for another great interview.